Today's conference is scheduled to begin shortly. Please continue to stand by. Thank you for your patience.
All right, ladies and gentlemen. For those of you joining today, we're going to be playing some Tesla earnings stream. And let's take a look at some information that they've released. So they got 27 pages in their summary. This is all the information they're going to be going over in the conference call. I don't think this is going to be an extraordinarily important earnings call. Now, if you look at the chart, it's a little important because we're sitting at an equilibrium point. But in terms of the company, I think the most important thing is the updates to the new factories. And as long as nothing else is exploding, I think generally we'll be okay here. So Q2, 2021. Automotive revenues top $10 billion for the first time, year over year, 97% increase. That's fairly impressive. Of which regulatory credits, actually reducing regulatory credits, down 17%. Gross profit up 120%. Wow, that's pretty good profit on that. Total revenues are just about 12 billion. And operating margin 11% overall. Adjusted EBITDA up 106%. That's pretty good. That's pretty good right there. That's going to be year over year. Yep, that's what it looks like. And all in all, even looks like performing on the financial side of things here. That's not bad. Ooh, they're going to attribute the 2018 CEO award of 106 million in Q2. Jeez. Go Elon, the most aggressive pay package on the planet. Of course, it is based on profitability, so can't be too mad. So the cash decreased a little bit to 16.2 billion, net debt and finance lease repayments of 1.6 billion. Free cash flow partially offset by free cash flow of 619 million. So it's a little bit interesting right there. At some point, maybe try to dig down into that, but not much we can do about it. Total production 206,000 Model S and Y. Oh no, I'm sorry. S and X is 2,300, 200,000. 204,000 for the Model 3 and the Model Y. Total deliveries, 201,000, up a little bit from the prior quarter. Up over double from last year. Total supply, solar deployed up 215%. Storage deployed up 204%. That's gotta feel good. Yeah, I think they need to do a lot more energy storage stuff. Get into more of the industrial side of things. And supercharger stations up 46%, connectors up 49%. Over a year ago. Okay, pretty good. So this is the crux of the issue right here, in my opinion, is getting to the factories. So production ramp of the Model S progressed over Q2. Given strong U.S. demand, the majority of the production was delivered in North America. Built out of Gigafactory Texas continued to progress in Q2 with commissioning having begun in some areas of the factory. That's good. Although I wonder when that's going to finally launch. Shanghai, how's it doing? About 450,000 per year in production. That's not bad. Introduced a standard range version of the Model Y, which starts at whatever that equals. Due to strong U.S. demand and global average cost optimization, completed the transition of Gigafactory Shanghai is the primary vehicle export hub. Okay, so they're exporting from China to other parts of the world. Demand remains well above supply in Europe. Don't see a lot of hey, you know, this is gonna get going sometime soon here. Continue installing equipment, have begun testing tools, and are working as quickly as possible towards starting production. Seems a little thin on Europe. So US, Canada, Europe, and China all actually grown pretty nicely over the past couple of quarters. Nice trend at about the 35, 40 degree level. Not too bad. Autopilot full self-driving. I think a lot's known about this. If you guys haven't seen the new full self-driving version 9 beta, has this pretty cool graphic of essentially what the neural net sees, and it gives you a good indication of what are cars. And if you notice, there's this red line here. It goes kind of blurry, then it goes real solid. The solid colors are the things it's sure about, and the things that's gray is things it's a little less sure about. So I think that's pretty interesting. Yeah, what up, PJ? Yeah? Yeah, 2018, right? I know. Interesting times. Hopefully we'll do more of these streams with just generally all kinds of stuff, probably. So removal of radar enabled the collection of vast data set of corner cases. Focus on vision. Oh, maybe that's why they... Hey, what's up, Jay? Well, I'm sure they'll talk about their Bitcoin holdings. Somebody's going to mention it. You know, Elon has already said several times publicly that they're not changing their current Bitcoin position, and you got to take his word on that. I would be shocked if they said that they sold or even bought Bitcoin at this stage. So I think it said something interesting here. The removal of radar, which is enabled by our collection of a vast data set of corner cases. You know what? I loosely have a feeling, just by reading this, it just hit me. Maybe some of their corner cases were hurt by the fact they didn't have radar on some information for some objects. So they're like, well, how do we have these objects with radar and these objects without radar? Maybe at one point they said, let's just ditch radar. Could be. I don't know. I don't think he's ever said that specifically, but just based on how they worded this, they're talking about corner cases and removing radar. Focus on vision and increase the pace of improvement. I think that is, maybe it's a possibility. I don't know, but it would make sense. Hold on. All right, so we're starting.
There will be a question and answer session. To ask a question during the session, you will need to press star 1 on your telephone. Please be advised that today's conference is being recorded.
That's beautiful right there.
If you require any further assistance, please
look at the
press star
storage.
0. I would now like to hand the conference over to your speaker today, Martin Viecha, Senior Director of Investor Relations. Please go ahead.
Thank you and good afternoon, everyone. Welcome to Tesla's second quarter 2021 Q&A webcast. I'm joined today by Elon Musk, Zachary Kirkhorn, and a number of other executives. Our Q2 results were announced at about 1 p.m. Pacific time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events and results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up.
Wow.
Please press star 1 now if you would like to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Sure. So to recap, Q2 2021 was a record quarter on many levels. We achieved record production, deliveries, and surpassed over $1 billion in GAAP net income for the first time in Tesla history. I'd really like to congratulate everyone at Tesla for an amazing job. This is really an incredible milestone. It also seems that public sentiment towards EVs is at an inflection point. And at this point, I think almost everyone agrees that electric vehicles are the only way forward. Regarding supply chain, while we're making cars at full speed, the global chip shortage situation remains quite serious. For the rest of this year, our growth rate will be determined by the slowest part in our supply chain, which there are a wide range of chips that are at various times the slowest part in the supply chain. I mean, it's worth noting that if we had everything else, if we had vast numbers of vehicles and cells, we would not be able to make them. Everything except the chips, we wouldn't be able to make them. The chip supply is fundamentally the governing factor on our output. It is difficult for us to say how long this will last because we don't have. This is out of our control essentially. It does seem like it's getting better, but it's hard to predict. In fact, even achieving the output that we did achieve was only due to an immense effort from people within Tesla. We were able to substitute alternative chips and then write the firmware in a matter of weeks. It's not just a matter of swapping out a chip. You also have to rewrite the software. So it was an incredibly intense effort of finding new chips, writing new firmware, integrating with the vehicle, and testing in order to maintain production. And I'd also like to thank our suppliers who work with us. And there've been many calls, midnight, 1 a.m., just with suppliers in resolving a lot of the shortages. So thanks very much to our suppliers. Let's see, in terms of FSD subscription, we were able to launch full self-driving subscription last month, and we expect it to build slowly but then gather a lot of momentum over time. Obviously, we need to have the full self-driving build widely available for it really to take off at a high rate, and we're making a lot of progress there. So, yeah, I think FSD subscription will be a significant factor probably next year. With regard to Giga Texas and Giga Berlin, we're actually doing this earnings call from Giga Texas, so we're in the factory right now doing this earnings call. And the team has made incredible progress here. You can see the pictures online, and see that there's basically nothing a year ago, and there's a mostly complete large factory a year later. So it's really great work by the Giga Texas team, and then also great work in Berlin, or Brandenburg, with the team there. So we expect to be producing the sort of new design of the Model Y in both factories in limited production later this year. It's always like it's hard to sort of explain to people who have not been through the agony of a manufacturing ramp. Like, why can't you just turn it on and make 5,000 a week? It is so hard to do manufacturing. It is so hard to do production. To first approximation, there are 10,000 unique parts and processes that have to work, and the rate of growth of production goes as fast as the least lucky and dumbest of those 10,000 things. And a bunch of them are not even in our control. So it's like, it's insanely difficult. I'm fond of saying that prototypes are easy and production is hard. And arguably the really remarkable thing that Tesla has done is not to make an electric car or to be a car startup, because there have been hundreds of car startups in the United States and outside the United States. So the thing that's remarkable is that Tesla didn't go bankrupt in reaching volume production. That's the amazing part, because everyone else did. Because they all thought the prototype or the idea was the hard part, and it is not. It is trivial by comparison with actual production. So it's always worth noting that of all the American car companies, there are only two that have not gone bankrupt, and that is Ford and Tesla. So, the seeds of defeat are sown on the day of victory, and we must be careful that we do not do that. So often, if you look at history, so often the seeds of defeat are sown on the day of victory. We will endeavor not to make that the case at Tesla. So let's see, the Model Ys in Texas and made in Texas and Berlin will look very much like the Model Ys we currently make, but there are substantial improvements in the difficulty of manufacturing. So for example, the Model Y made here and in Berlin will have a cast front body and a cast rear body, whereas the one in California has a cast rear body but not a cast front body. We're also aiming to do a structural pack with 4680s cells, which is a mass reduction and a cost reduction. And but we're not counting on that as the only way to make things work. We have sort of a backup plan with non-structural pack and 2170s essentially. So, but at scale production, we obviously want to be using 4680s and structural pack. From a physics standpoint, this is the best architecture, and from an economic standpoint, it is the lowest cost way to go. So the lightest, lowest cost. But there's a lot of new technology there, so it is difficult to predict with precision.
Wow, he has a contingency plan because it's not going that well. That's how I read that.
A bit more about the 4680 production. Yeah, so we are making great progress on the 4680 cells, but there is a tremendous amount of innovation that we're packing into that 4680 cell. And so,
not yet, Daniel.
It's not simply a sort of minor improvement on state of the art. There are, and we went through this on the battery cell day, really dozens of, half a dozen major improvements and dozens of small improvements. So I think it will be great, but it's difficult to say when the last of the technical challenges will be solved. So in conclusion, our team continues to make huge efforts to make our factories run at full speed, which is very difficult. We have had some factory shutdowns due to part shortages, and we hope those will be relieved in the coming weeks and months. And we're making great progress on full self-driving. Some of the progress is not easy to see because it's at sort of a foundational software level. And so then it ends up being sort of a 2 steps forward, 1 step back situation. But over time, if you do 2 steps forward, 1 step back, and keep going, you do move forward. So I'm highly confident that the cars will be capable of full self-driving. If they have a full self-driving computer and the cameras, I'm confident that they will be able to drive themselves with a safety level substantially greater than that of the average person. Once again, thanks to all of our employees who are making this a breakthrough year for Tesla and an incredible quarter. Thanks, guys.
Thank you very much, and we have some follow-up remarks from Zachary Kirkhorn.
Yeah, thanks, Martin, and thanks, Elon. Just to reiterate, Q2 was a great quarter for the Tesla team with strong improvements across the business. In particular, auto gross profit and margin, excluding credits, increased substantially. This was primarily driven by better cost optimization across our factories, good execution against our cost reduction plans, as well as increases in production and delivery volume. There was some benefit from pricing action, mostly in North America. However, it was small in the context of the other contributors. Note that the Model S and X program was at a slight loss for the quarter due to the relatively low volume. And supply chain challenges, including expedites, continue to provide cost headwinds. Additionally, it's encouraging to see the progress made on profitability within our energy and services and other businesses. While there's some benefit to looking at our progress quarter over quarter, I find it more helpful to look at progress over a slightly long-term horizon. Over the last 2 years, our vehicle delivery volumes have more than doubled. This volume increase was made possible by a steady decrease in ASPs of more than 10%, driven by a roadmap to increase affordability and shifting mix towards our more affordable vehicles. Yet over that same period of time, our auto gross margin, excluding credits, has increased nearly 10 percentage points to our highest yet since the introduction of Model 3. This is only possible because our average cost per vehicle has reduced by more than the reduction in average price. This is a remarkable achievement in the context of the volume growth and ASP reduction I've mentioned, and a testament to the hard work by the Tesla team. Additionally, OPEX as a percentage of revenue has declined, and in particular SG&A, representing the work we've done to become more efficient as we scale the company while still making the required R&D investments to support our future. As a result, our GAAP operating margins have risen from negative to double-digit, in line with what we have guided. By managing our overhead costs and driving higher volumes, our P&L is benefiting from the marginal profitability of each incremental unit. Or said differently, we are recognizing the benefits of scale and improved fixed cost absorption. With strong operating cash flows and cash balance, we are putting that cash to use. CapEx continues to tick up, primarily driven by capacity investments in Austin, Berlin, and Shanghai. Additionally, each quarter we are using our cash to retire legacy debt, which was taken on at a time when interest rates and company risk were much higher than in today's environment. As I've mentioned before, our 2021 volumes will skew towards the second half of the year as we push for continued sequential increases in volume. Despite the great work so far managing the instability of the supply chain, these challenges remain and are unfortunately increasing in pain with a higher volume. As we work through the uncertainty, we want to ensure we do our best to manage customer wait times, as well as the impact these interruptions have on our employees and costs. And as Elon mentioned, volume growth will be determined by part availability, as we have the factory capacity ready and are in a strong demand position. I'm excited to see the progress made by the Tesla team as we continue building the business and strengthening our financials. Thank you very much.
Great, thank you very much, Zach. And now let's go to the retail investor questions on say.com. The first question from Robert M. is, Tesla's website still says Cybertruck production is expected to begin in late 2021. Can Tesla share more details on the current status of the Cybertruck and confirm if production is still expected?
Okay.
Lars, do you want to?
Sorry, we cut out there for a second. Yeah, the Cybertruck is currently in its alpha stages. We finished the basic engineering architecture of the vehicle. With the Cybertruck, we're redefining how the vehicle is being made. As Elon said, it carries much of the structural pack and large casting designs of the Model Y being built in Berlin and Austin. Obviously, those take priority over the Cybertruck, but we are moving into the beta phases of Cybertruck later this year, and we'll be looking to ramp that in production in Giga, Texas after Model Y is up and going.
Yeah, it's just worth reemphasizing that the extraordinarily difficult,
That is bad.
Of ramping production of large manufactured items. The risk of being repetitive, it's actually easy to make prototypes or sort of handle small volume production, but anything produced at high volume, which is really what's relevant here, is it's going to move as fast as the slowest of the, say, rough order of magnitude, 10,000 unique parts and processes. And so you could have 9,999, but just one is missing. I mean, we were missing, for example, like a big struggle this quarter was the module that controls the airbags and the seat belts. And obviously you cannot ship a car without those. And that limited our production severely worldwide in Shanghai and in Fremont. So it wouldn't have mattered if we had 17 different car models because they all need the airbag module. So it's just irrelevant. So in order for Cybertruck and Semi to scale to volume that's meaningful for customer deliveries, we've got to solve the chip shortage, or working with our suppliers people sometimes say, why don't you just build a chip fab? Okay, that would take us, even moving like lightning, 12 to 18 months. So it's not like you can just whip up a chip fab. It's just like, I'll just make a quick chip fab. Some of these things are, anyway. It is quite a trial dealing with all of the constraints of scaling a large manufactured object. I think it may be the case that Tesla is scaling. I think we might be the fastest in history ever for scaling a large manufactured object. I think maybe the Model T would have been comparable back in the day, the Ford Model T. And probably the internet knows the answer, but I think we may be scaling a large manufactured object at the fastest rate in history, or I'd like to know who did it faster, so we can learn from them. So it's worth just noting that, in the grand scheme of things, it's not bad. So the Cybertruck and Semi, actually both are heavy users of cell capacity. So we've got to make sure we have the cell capacity for those two vehicles, or it's kind of pointless. We can make a small number of vehicles, but the effective cost if you make a small number of vehicles is insane. Like they would literally cost $1 million a piece or more. And there's a reason why you do things in volume production, which is to get the economies of scale that get the costs down. But we are looking at a pretty massive increase in cell availability next year. But it's not like in January 1. It comes through it ramps up through the course of next year. But even without Tesla's
some stream issues apparently. So Daniel, it looks like Cybertruck production,
okay.
I guess, is delayed.
Tesla cell production, we believe our suppliers will be able to deliver about twice as much cell output in next year as this year. Drew, do you want to talk more about that?
Given concerns over cells bottlenecking growth, our target is to grow cell supply ahead of the 50% year-on-year growth targets of the vehicle business, and also enable increased energy storage deployments. Our cell suppliers are tracking to double their production in 2022.
It's worth noting, like, if you have a target of a certain number, that doesn't mean it happens like as sure as night follows day. It's a target. So if there is some calamity in the world that interrupts the supply chain, then it will be less. But the contracts that we have with cell suppliers call for roughly a doubling of cell supply to Tesla in 2022. And we have to juggle these it's a whole bunch of exponential graphs sort of overlaid on top of each other. And small changes in where you are on the x-axis of time can quite substantially change the area under the curve. So what we're thinking of doing is like, depending on, it's basically overshooting on cell supply for vehicles, and then as we have, say, excess cell supply in 1 month or another, then routing that cell output to the Megapack and Powerwall. Or by the same token, if we're prioritizing vehicle production, if there's a shortage of cell output for some reason, then we will throttle down Megapack and Powerwall production. So that something's got to give, basically.
Or if there's a disruption to vehicle production,
yes,
we have an outlet for the cell capacity.
Yes, exactly. There's a tremendous amount of inertia in the supply chain. So if we say to a supplier, we want you to double cell output, well, even doing that in a year is very difficult. And then that that system has a tremendous amount of momentum. It is like a flotilla of super tankers. It's insane.
Speaking of which, from a raw materials perspective, we also have long-term contracts to secure our supply chain to also enable this growth. So we're not just looking at the suppliers, but upstream from there.
Yeah.
Which is more flotillas.
Yeah, exactly. As mentioned, things will move as fast as the slowest part of the entire supply chain, which goes all the way back to, raw materials, lithium and nickel and that kind of thing. There's sometimes misperception that Tesla uses a lot of cobalt, but we actually don't. Apple uses, I think, almost 100% cobalt in their batteries and cell phones and laptops, but Tesla uses no cobalt in the iron phosphate packs and almost none in the nickel-based chemistries. So, on a weighted average basis, we might use 2% cobalt compared to, say, Apple's 100% cobalt.
Wow.
Anyway, so it's just it's really just
that's crazy.
We expect to basically have zero cobalt in the future. So, I do agree with that. I think probably there is a long-term shift more in the direction of iron-based lithium-ion cells rather over nickel. As the energy density of sort of iron, or what's called typically iron phosphate, but you might as well just call it iron. The phosphate is taken for granted. But iron-based cells, lithium-ion cells, and nickel-based lithium-ion cells, I think probably we'll see a shift. My guess is probably to 2/3 iron, 1/3 nickel, or something on that order. This is actually good because there's plenty of iron in the world. There's an insane amount of iron. But there's much less nickel, and there's way less cobalt. So it is good for relieving the long-term scaling to move to iron-based cells mostly. And I think long-term, possibly there's a good chance that all stationary storage, that is Powerwall and Megapack, move to iron. This is most likely the case since you do not need to transport it, and there's less of volume and mass constraint for stationary storage. So then nickel would be for really for long-range road transports, ships and aircraft and that kind of thing.
Thank you. Let's go to the second question from retail, which is, Elon has said that Tesla will be opening up the supercharger network to other EVs later this year. Can you share some more details on how this will be structured? Will this be a select brands, or will they contribute to the growth of this network?
Yeah, we're currently thinking it's a real simple thing where you just download the Tesla app and you go to a supercharger and you just indicate which stall you're in. So you plug in your car, even if it's not a Tesla, and then you just access the app and say, turn on the stall that I'm in for how much electricity. And this should basically work with, I think, almost any manufacturer's cars. There will be a time constraint. So if the charge rate is super slow, then somebody will be charged more because the biggest constraint at the superchargers is time. How occupied is the stall. And we'll also be smarter with how we charge for electricity at the superchargers. So, rush hour charging will be more expensive than off-hours charging because there are times when the superchargers are empty and times when they're jam-packed. And so it makes sense to have some time-based discrimination on it.
Yeah, we've been doing that, and it's been working, and people respond, and it helps with utilization.
Yeah, exactly. So
Tesla likes discrimination.
Yeah, I think we're in Europe and China and most parts of the world. It's the same connector for everyone. So this is a fairly easy thing to do. Developed our own connector,
That's so funny.
Which, in my opinion, is actually the best connector. It's small and light, and looks good. It's no standard, so we developed our own connector, which, in my opinion, is actually the best connector. It's small and light, and looks good. So an adapter is needed to work for EVs in North America, but people can buy this adapter, and we anticipate having it available at the superchargers as well, if people don't sort of steal them or something.
We have a good solution for that.
Okay. So, but you know, that is just that's a constraint on the North American thing.
Yeah.
That's basically a vestige of history. But I think we do want to emphasize that it is our goal is to support the advent of sustainable energy. It is not to create a walled garden and use that to bludgeon our competitors, which is sometimes used by some companies.
I think it's also important to comment that increasing the utilization of the network actually reduces our costs, which allows us to lower charging prices for all customers, makes the network more profitable, allows us to grow the network faster. So that's a good thing there. And no matter what, we're going to continue to aggressively expand the network capacity, increasing charging speeds, improving the trip planning tools to protect against site congestion using dynamic pricing, as Elon mentioned.
Yeah.
And just continue to focus on minimum wait time for all customers.
Yeah, obviously, in order for this for the supercharger to be useful to other car companies, cars, we need to grow the network faster than we're growing vehicle output, which is not easy. We're growing vehicle output at a hell of a rate. So superchargers need to grow faster than vehicle output. So this is a lot of work for the supercharger team. But it is only useful in the grand scheme of things. It's only useful to the public if we're able to grow faster than Tesla vehicle output. So that is our goal.
Thank you very much. And the third question is, Elon said 4680 cells aren't reliable enough for vehicles. Is this referring to cycle life, degradation, or something else? Please update us on progress of 4680s and what still needs to be done to make them reliable enough for vehicles.
Yeah, I mean, really, this is not. We'll definitely make the 4680 reliable enough for vehicles, and I think are at the point where in limited volume it is reliable enough for vehicles.
Yes.
Again, going back to limited production is easy, or prototype production is easy, but high volume production is hard. There are a number of challenges in transitioning from sort of small scale production to a large volume production. Not to get too much into the weeds of things, but right now we have a challenge with basically what's called calendaring, or basically squashing the cathode material to a particular height. So it just goes through these rollers and gets squashed, like pizza dough, basically, but very hard pizza dough, and it's denting the calendar rolls. This is not something that happened when the calendar rolls were smaller, but it is happening when the calendar rolls are bigger. So just we're like, okay, weren't expecting that.
Yeah. It's not a science problem. It's an engineering problem. It's not a question of if, it's a question of when, and the team is 100% focused on resolving these limiting processes as quickly as possible.
Exactly.
And on the reliability side, as Elon mentioned, we have successfully validated performance and the lifetime durability of the 4680 cells produced at Cato. And we're continuing ongoing verification of that reliability. We're actually accruing over 1 million equivalent miles on our cells that we produce every month in our testing activities. As the focus on that is very clear. We want high quality cells for all of our customers. We're just focused on the unlucky limiting steps in the facility, and with the engineers focused on those few steps remaining, we're going to break through as fast as possible.
Meantime, we have a massive amount of equipment on order and arriving for the high volume cell production in Austin and Berlin, and but obviously, given what we've learned with the pilot plant, which is in Fremont, which is really quite a big plant by most standards, we will have to modify a bunch of that equipment. So, it won't be able to start like immediately. But it seems like, Drew, correct me if I'm wrong, but we think most likely we will hit an annualized rate of 100 gigawatt hours a year sometime next year.
We'll have all the equipment installed
to
accomplish 100 gigawatt hours, and it's possible that by the end of the year we will be at an annualized rate of 100 gigawatt hours by the end of the year.
My guess is more likely than not, about 50% of reaching 100 gigawatt hours a year by the end of next year on an annualized rate, something like that.
Yep.
But it could shift by a little bit. So, but it's nothing, as Drew mentioned, it's nothing fundamental.
No.
Just a lot of work.
Yeah, and even to the large roller question, Elon, right? Like on the anode side, the large rollers work great, no concerns. And so we're just learning as we go. And the nice thing about having that facility, on the fast track like we had it, and we talked about it at Battery Day, was really de-risking the big factories here. That's what we've done, and we've learned a lot. And with each successive iteration, the ramp up and the equipment installation will be faster and more stable. Yep.
All right. Thank you very much. And the last question from retail is from Emmett. Can Elon do an interview with one of our YouTube channels once or twice a year? I would nominate David Lee on Investing or Rod Maurer's Tesla Daily channels as first possible candidates.
I guess I'll do an interview. Just bear in mind, like if I'm doing interviews, then I can't do actual other work, So it's not, only so much time in the day. So, but yeah.
Why did they even allow that question on the call?
Also, like, this is the, I wouldn't say the last time I'll do earnings calls, but this is I will no longer be default doing earnings calls. So obviously I'll do the annual shareholder meeting, but I think going forward, I will most likely not be on earnings calls unless there's something really important that I need to say.
Okay, thank you. Let's go to institutional questions. The first one, and we covered a lot of this already. Can you please update us on timelines for the start of production of Berlin and Austin, Model Y, Cybertruck, and the Semi? Do you expect the ramp of Cybertruck to be as difficult as it is a new process?
I think Cybertruck ramp will be difficult because it's such a new architecture. It's going to be a great product. It might, I think, be our best product ever, but there's a lot of fundamentally new design ideas in Cybertruck. Nobody's ever really made a car like this before, a vehicle like this before, so there'll probably be challenges because there's so much unexplored territory.
Thank you. I think question 2 and question 3 we can skip, given we have already addressed it. I'll go to question 4. In 5 years' time, how much faster, better could you be at manufacturing capacity expansion using cut and paste? And what are the biggest issues you need to solve to get to that rate?
Well, like I said, I think we might be the fastest growing company in history for any large manufactured item. So those who have not actually been involved in manufacturing ramp have just no idea how painful and difficult it is. It's like, you got to eat a lot of glass, and for our manufacturing ramp, it's hard.
I think if you look at the expansion we've done in Shanghai, that factory was built in less than.
Cutting out again there. Yeah, no Bitcoin questions yet. They only take 3 retail questions, and they actually get voted up by other retail investors. So that one didn't make the cut. But Elon's already talked about it several times, even most recently in that the B word interview or whatever he did with Cathie Wood, that he hasn't. SpaceX owns Bitcoin, Tesla owns Bitcoin. They talked about mining Bitcoin, but they don't do any. They're not selling any additional. Yeah, I don't think Bitcoin's a huge issue. I think as we wait for them to come back, I think that it's very interesting if you notice the flow of the call. It first started off with Elon trying to figure out positive things to say. I think he's in a different form of production hell. So while he's making about 1 million cars a year at this pace, give or take, I think the ramp up of these other gigafactories, and when you think about it, before he only had to deal with, he was dealing with Model S and Model X with limited production capacities, and then the Model 3, which was the production hell, trying to get to 5,000 a week, got through that, and I thought he was in the clear. But now, keep in mind, he basically 16-folded his problem. He's now building 2 factories across the globe from one another that are producing first the Model Y, then the Cybertruck, the semi-truck. Just the list just goes on, and now he's going through this production hell, not to mention full self-driving, which is software production hell. So fortunately, his team's gotten, I don't know about fortunately, but his team, let me make sure that we're still live streaming over here. Maybe something happened to that.
Wrong. Anywhere on Earth, something happens to mess up the supply chain.
I think the human capital growth, though, of having factory here, Berlin.
Oh, something happened there. Sorry.
Does allow us to maybe not exponentially grow, but hopefully.
We are exponentially growing.
Yeah, hopefully maintain that exponential growth.
Yeah. It takes a while to hire all the people and train all the people to operate the factory. A factory is like a giant cybernetic collective, and you can't just hire 10,000 people and have it work instantly. It's not possible. I really encourage more people to get involved in manufacturing. I think, especially in the U.S., this has just not been an area where all that many smart people have gone into. I think the U.S. has an overallocation of talent in finance and law. It's both a criticism and a compliment. I'm not saying we shouldn't have people in finance and law. I'm just saying maybe we have too many smart people in those arenas. Maybe.
Manufacturing's fun.
Yeah, manufacturing is great. It's a very interesting problem to solve, and obviously you can't have stuff unless someone makes it. That's how you get stuff. Yeah.
Okay, thank you very much. And let's go to the last investor question. Does Tesla plan to offer more services beyond FSD or high-speed connectivity as part of its subscription bundle going forward? What areas in particular present an opportunity?
Yeah, we don't have a lot of ideas on this, to be frank. Really, full self-driving is the main thing. Things are obviously headed towards, fully autonomous electric vehicle future. And I think Tesla is well positioned and frankly is the leader objectively in both of those arenas, electrification and autonomy. It's always tempting to try to find analogies, but with other companies or whatever. But really, the value of a fully electric autonomous fleet is insanely gigantic. Boggles the mind, really. So that will be one of the most valuable things that is ever done in the history of civilization.
Thank you very much. And now let's go back to analyst Q&A, please.
Thank you. As a reminder, to ask a question, you will need to press star 1 on your telephone. To withdraw your question, press the pound key. In the interest of time, we ask that you please limit yourself to 1 question and 1 follow-up. Our first question comes from Colin Rusch with Oppenheimer. Your line is open.
Thanks so much, guys. Can you speak to the attach rates for FSD so far and where you're targeting in terms of the subscription levels?
Yeah, it's not worth commenting on right now. It's not meaningful. We really need Full Self-Driving, at least the beta, to be widely available, so anyone who wants it can get it. Otherwise, it would be pointless to read anything into where things are right now. Yeah.
Okay, and then just the follow-up there is about the cadence of the regulatory environment, keeping up with the technology. Are you seeing meaningful evolution in terms of the regulators really understanding the technology and beginning to set some standards here sometime in the near term?
At least in the U.S., we don't see regulation as a fundamental limiter. We've obviously got to make it work and then demonstrate that the reliability is significantly in excess of the average human driver for it to be allowed, for people to be able to use it without paying attention to the road. But I think we have a massive fleet, so it will be, I think, straightforward to make the argument on statistical grounds, just based on the number of interventions, or especially interventions that would result in a crash at scale. It will have billions of miles of travel to be able to show that it is, the safety of the car with the autopilot on is, 100% or 200% or more safer than the average human driver. At that point, I think it would be unconscionable not to allow the autopilot, because the car just becomes way less safe. It would be sort of like, take the elevator analogy. Back in the day, you used to have elevator operators with like a big sort of switch that operate the elevator and move between floors. But that get tired or maybe drunk or something, or distracted, and every now and again somebody would be kind of shared in half between floors. That's kind of the situation we have with cars. Autonomy will become so safe that it will be unsafe to manually operate the car, relatively speaking. Today, obviously we just get in an elevator, we press the button for which floor we want, and it just takes us there safely. And it would be quite alarming if elevators were operated by a person with a giant switch. That's how it would be with cars.
Thank you. Let's go to the next question, please.
Next question comes from Rod Lache with Wolfe Research. Your line is open.
Hi, everybody. Your cost of goods sold per vehicle is already down to the mid $37,000 range in the quarter. It's down $5,000 year over year, despite some of the inefficiencies that you talked about. And I know that a lot is going to change from here, just given how mix is going to evolve. But if you're successful on the structural pack and front and rear castings and the launch of the 4680 cell, can you just maybe give us a sense of what a successful outcome would look like maybe a year from now? Obviously, a lot has to go right, but just any kind of broad framework for us to think about.
Yeah, it's really difficult for us to make specific predictions. It's very difficult. I think we feel confident of say at least at 50% growth year over year next year, and maybe it's 100%, but that's you need a lot of crystal balls to figure out exactly what it's going to be, and it is literally impossible to make a specific prediction. But at least 50, maybe 100, something like that.
Okay. And maybe just separately from this, can you just clarify what the status is of some of the advances in battery manufacturing, things like dry cathode mixing that you talked about on Battery Day? What's the timeline? How are those evolving?
Yeah, we commented on it today already, actually. But in the facility at Cato, over 90% of the processes have demonstrated rate there, but we are limited by the unlucky few that have not, and that's what we're working on. One of them that Elon mentioned was running the full-scale cathode calendar. We're working through some improvements that we need to make to that equipment and to the actual raw material itself to not have those limitations. But again, it's an engineering problem. It's not a question of if, it's a question of when. On the mixing side, we haven't actually really had any challenges specific to your question. And fundamentally, we're still happy with the dry process direction in terms of the factory footprint, complexity, utility consumption, space, and overall complexity simplification.
Yeah.
And the cost associated with everything that I just mentioned.
Yeah. And we don't have overemphasize dry cathode. I mean, it is a, I don't know, maybe it's like 10 or 15% of the cost improvement or something like that. I don't know, 20% maybe over wet.
Oh, yeah, 10, closer to 10.
Yeah. So it's like just like people don't think like this is like the Messiah or something. Wet versus dry reduces. Dry is like 10% less cost than wet. So it's not, not 10%. Still nothing to sneeze at, especially if you're making hundreds of gigawatt hours a year. But it's not the Messiah, basically.
Yeah.
Thank you very much. We can go to the next question, please.
Next question comes from Pierre Ferragu with New Street Research. Your line is open.
Hey, thanks. Thanks very much for taking my question. I have another question actually on batteries, but on a slightly different angle. I was wondering how you're looking at your sourcing strategy for the 4680. You've talked a lot about all the work you're doing to develop your in-house production. But what about asking other battery manufacturers to do 4680 cells with their own technology, maybe less innovation than what you guys are lining up internally? And I was wondering if the first 4680 cells that we'll see on the road will definitely come from Tesla's own manufacturing lines, or whether they could be coming actually from outside suppliers as well. Now, have a quick follow-up.
Yeah, we are in fact working with our existing suppliers to produce 4680 format cells, and this is just a guess right now, but I see us sort of like consolidating around a 4680 nickel-based structural pack and for long-range vehicles, and then not necessarily a 4680 format, but some other format for iron-based cells. And so we right now we kind of have the Baskin-Robbins of batteries situation, where we have so many formats and so many chemistries that it's like we've got like 36 flavors of battery at this point. This results in an engineering drag coefficient where each variant of cell chemistry and format requires a certain amount of engineering to maintain it and troubleshoot, and this inhibits our forward progress. So it is going to be important to consolidate to just maybe ideally 2 form factors, maybe 3, but ideally 2, and then just one nickel chemistry and one iron chemistry, and so we don't have to troubleshoot so many different variants.
Yeah, and towards that end, we are engaging with the suppliers that we've had good partnerships with on 4680 designs to enable that simplification, and so far so good. They're working on, they're bringing their core competencies to bear on that. We're not mandating like what's going on inside, but it's been a good collaboration.
Yeah. And we do expect to see significant increases in supply from our existing suppliers, in addition to the cells that Tesla is making. So it's both. Sometimes I get questions from our cell suppliers of like, are we just gonna make all the cells ourselves? And we're like, no, please make as many as you possibly can and supply them to us. We have a significant unmet demand in stationary storage. Megapack is basically sold out through the end of next year, I believe.
Yeah.
We have a massive backlog in Powerwall demand. The demand of Powerwall versus production is an insane mismatch. Now, part of that problem is also the semiconductor issue. So we use a lot of the same chips in the Powerwall as we do in the car. So it's like, which one do you want to make, cars or Powerwalls? So we need to make cars, so therefore Powerwall production has been reduced. But as that semiconductor shortage is alleviated, then we can massively ramp up Powerwall production. I think we have a chance of hitting an annualized rate of 1 million units of Powerwall next year, maybe, sort of on the order of 20,000 a week. But again, dependent on cell supply and semiconductors. But in terms of demand, I think there's probably demand for in excess of 1 million Powerwalls per year, and just a vast amount of megapacks for utilities. As the world transitions to a sustainable energy production, solar and wind are intermittent, and by their nature really need battery packs in order to provide a steady flow of electricity. And when you look at all of the utilities in the world, this is a vast amount of batteries that are needed. That's why, long term, we really think, sort of combined Tesla and suppliers need to produce at least 1,000 gigawatt hours a year, and maybe 2,000 gigawatt hours a year.
Okay, great, thank you. And I have a quick question. I know, Elon, you don't think it's meaningful today, but I'd be curious to know, if you have any stats about when you announced a new pricing on a FSD moving from 10 grand up front to 199 without the lock-in. I'd be curious to understand, how it affected behavior, and if you saw like a massive uptake in the service. And I'm not thinking about people looking at it as an FSD, but more, to try the most advanced version of autopilot and to try it. So in the first days you've announced the pricing, have you seen like a very significant spike in the take rate, and can you give us a sense of how big it was?
I don't know if he wants to answer that one.
Okay, so you're asking, like, is the FSD take rate too expensive, and that's why we're doing subscription? Or I'm not sure if I understand your question correctly.
No, my question is, from the time you announced like the subscription at the $199 per month, how much did like the take rate increase? Like the percentage of people who basically took the subscription as they bought a new car? versus how it was when they had to pay 10 grand up front?
Yeah, this is Zach here. I mean, I think we're still early in understanding how FSD subscription will unfold, but a couple of data points here. So we took a look at our backlog to see, of customers in our backlog who have ordered FSD, did they cancel, presumably to go to subscription after they take delivery? And the level of cancellations there was not seeing cannibalization there. It's possible that that changes, but that was also part of our pricing strategy at $99 and $199.
Yeah, I mean,
it's also part of our pricing strategy at $99 and $199.
Yeah, I mean, it's like any given price is going to be wrong, so we'll just adjust it over time as we see, the value proposition makes sense to people. So we're just really, I'm not thinking about this a lot right now. We need to make full self-driving work in order for it to be a compelling value proposition. Otherwise, people are, kind of betting on the future. I mean, right now, does it make sense for somebody to do an FSD subscription? I think it's debatable, but once we have full self-driving widely deployed, then the value proposition will be clear, and at that point, I think basically everyone will use it, or it could be a rare individual who doesn't.
Okay, thank you very much for your help, and I think that's all the time we have for today. Thanks for all your questions, and we'll speak to you again in 3 months' time. Have a good day, everyone.
All right, thank you.
This
Okay.
concludes today's conference call. Thank
So that was interesting, and I don't know if I guess if I had to sum it up in a sentence or two, the sentence would be, "We need more time." I think is essentially what it is. Yeah, that's really what it boils down to. We need more time, and goodness, did they need more time? Like I was saying earlier, I think they bit off, not really bit off more than they can chew, but Elon time is proving to be Elon time this time around. I have no idea what the full self-driving subscriptions coming out was about. I really have no idea, because he just said it's he says, I don't know. So my question is, then why the hell did you do it? Yeah, I feel like Elon's trying to grasp at straws here. He's when did Tesla start? Like 2005 or something. So he's 15 years into Tesla and finally realizing everything, but he's kind of running out of things to kind of prop up the stock with, I have a feeling. But it's really, yeah. I think this is a pivot. This is a pivotal point in Tesla. It's reminding just the tone of that conference call, because people wanted it, JJ. Yeah, maybe, but why not just make the beta go wider then? Because the people that want it are the people that already paid $10,000 for it. So if it was running off the shelves, they'd be telling people about it. I don't think it's like Elon said, it's not going to change the numbers in either direction. I think one of the analysts or the institutional investors asked about that. So it's definitely not going to change the numbers. And you can see the reaction. The stock price is basically nothing, which is fine. Stock could come down first luck. Yes, maybe. I mean, maybe. We've been talking about Tesla and the fact that it's got to ramp up and we're not going to see meaningful production until 2022. And the way that they sounded, I mean, I think a lot of people were expecting Cybertruck deliveries at the end of the year, maybe even December 31st. But now the guy they let have 35 seconds of mic time probably did the most damage to the Tesla stock thing here today when he said that we're in alpha with Cybertruck and we'll be in beta by the end of the year. And he stopped himself from doing additional damage, or someone else stopped him from doing additional damage. So I think we just have to give him more time. I mean, it takes time to do this, and Elon's 100% right. All of us want the Teslas to be here today. Heck, I want the Teslas to be here today. I want the Cybertruck to be here today. I want my Cybertruck, and I want my neighbor to have their 5 Cybertrucks, and I want it to kind of kick Ford and Chevy's butt. At the same time, though, you have to realize, there's 10,000 processes, and it's really difficult to do. Not to mention a solid steel stamping on a truck, especially for consumers, is unheard of. But still, for beta to be done at the end of the year with the Cybertruck, my assumption would be Q2 next year at best. So you're looking at a year, 9 months to a year for the Cybertruck would be my assumption. I'm gonna write these down. 9 months to a year for the Cybertruck. Semi-truck. They didn't really talk about the semi that much. Now I do understand that a few companies are going to be taking delivery by the end of the year. They have some contracts for that. We'll see if they meet those contracts. If they meet those contracts, that is really good. That means at least they're able to whip something up so they're not voiding contracts. So you're going to see very limited production by the end of year. Very limited. They really didn't touch on Berlin at all. I'm kind of shocked. I wonder if they did that on purpose. I don't know if like I said earlier, I think they're in a second production hell. I don't know if Elon likes to oversell things or he just likes to put himself in the fire. But he talked about in that broadcast he did the other day, the B word or whatever it was called. He said some of the worst times of my life have been with Tesla, and that says something considering my life has been kind of garbage. So he talks about production hell and how that was really hard on him personally, and I think he's going to go through another one of those right now. The problem is with production hell, it was one plant and Elon could go there, sleep on the floor, and make it happen. This is a little bit different. He's really got to trust the team that's around him to kind of make a lot of these things happen. He can't go make a factory build faster, or he can't engineer the entire process of manufacturing. I think it's one thing if everything is in place and you can just go in and troubleshoot, but it's another thing when things are obfuscated by scale and blueprints and having to think in just multifaceted levels, which Elon is probably pretty good at, better than most people, but even for him, I think it's quite a bit for him to do that. And like I said, they just said we'll need more time. I don't think we're going to see anything meaningful until 2022. They said Texas was in a pretty good place, but they didn't say, yeah, we're definitely going to have cars in Q4. I heard no confidence on anything from Tesla in this earnings call. I heard nothing. Nothing. No confidence on anything. Not on full self. The full self driving was like, yeah, it kind of works, but we got to get better. The factories were like, yeah, we got to get up to scale, but we're having some manufacturing problems, and this is a really hard problem, guys. Cell production, the exact same thing, and so they're going through their own thing. Go buy BYD, ramp the blade cell. I'm not familiar with the blade cell, JJ, but you had a couple questions up above. I didn't interrupt the stream for. Inevitable. Yeah, I forget what that was about. Do the questions sound dumb and or ill-informed? I think these people don't spend enough time thinking about Tesla, at least as much as we do. Is people that probably have jobs, they have multiple companies that they're likely doing analysis on, and they really can't go as deep, nor do they care to. These are traditional finance people, and a stock like Tesla that doesn't do things from a traditional metric standpoint, they don't dive as deep as JJ does and like I do. And so yeah, I think they rehashed some old stuff. It feels like they're about 3 months behind the rest of the general Tesla fans, and so yeah, I think a lot of it was ill-informed, mistimed, something like that. Significant good news on the 4680 from Cato. Super confident for 2022. Yeah, but I didn't read super confident from 2022, and then you mentioned about the and someone else also mentioned about the lead cell, and Elon mentioned the lead cell. He said industry wide. I don't know what he meant by industry wide. Maybe he just means Tesla wide. But I mean, I don't know how much heavier a lead cell is than another cell. I do know that cobalt only accounts for a single-digit percentage of the overall weight of a cell or the mass of a cell. And so you're talking maybe a 10% weight difference if it's iron or versus it being cobalt or something else. But at the end of the day, if they can, if it's engineered in such a way and they put enough of them in there, it probably won't matter. And like he said, the long-range ones are going to get nickel-based cells, and the land-based storage is definitely probably going to get the lead cells. So I think it'll be fine. I don't really think it matters. As long as people's cars go vroom, no one really cares what's powering it. to be quite frank with you. So if it's whether it's a monetary decision or a weight decision, I think at the end of the day, people are going to get cars. But like I said earlier, coming into this, I said really what counts is Giga Berlin and Giga Texas, and I didn't hear anything super bullish on either of those. It looks like that they started off talking about the chip shortage, and they talked about. Did I say lead? Yeah, it's iron. I'm sorry if I said lead. But they didn't talk about anything of consequence that I think we needed to hear from them in order to say, okay, here's the light at the end of the tunnel. It's like, nope, we're looking for light at the end of the tunnel. We're thinking we're there, but we're looking for that light. I don't think they quite see it yet. Obviously, they're probably a little closer with Texas than with Berlin. They were holding their call actually from the Texas Gigafactory. So that was good. But aside of that, there really wasn't much good news. They didn't talk about the take rate on full self-driving or subscriptions, so left alone in the dark right there. They talked about going through engineering problems with manufacturing. It's not if, it's when, which is a good thing. We just have to have an extra, probably a year time horizon. So if everybody's thinking 2021, which I think a lot of people are and were, I think you probably have to think 2022 at this stage of the game. And they just need that extra time. It reminds me a little bit, if I go back to the chart over here, I have to give myself some additional time. Chart describer? What's that? That's new. They changed something on an update somewhere. Oh, there we go. So if you go back over here, keep in mind when Tesla started to launch. If you look at these earnings reports, the very first positive earnings was in Q4 of 2018. That was the first positive earnings, but things weren't quite to scale yet. I think if you look under the hood of the goodness that Elon generally talks about, that's what the stock market looks at. Is they try to get at what's under the hood. And so we're pretty sideways through here. We have positive earnings, we move up a little bit, and then we're unable to go past the high. We move a little bit lower, we have another earnings report, and then we have a negative earnings report right there. I think the earnings report here, so 2 quarters and 3 quarters here, they couldn't get it done with three positive quarters, and everyone was looking for S&P inclusion over here actually. But then what happened is the ramp. The ramp happened in late 2019 is when they got the 5,000. So once they hit, and that's also when they went profitable again. And I don't remember the exact timeline over here, but once they hit that manufacturing and once it looked like they were finally going to ramp up and they were finally going to get profitable again after a couple of quarters of not being profitable, that's when the stock really started to take off. Even from a low level, they didn't care what level it was from. And then it was catch-up time. JJ said something about going 5x in 2023. It's possible. It's possible because they're waiting for Tesla to execute and then it goes, and it almost feels like they're doing that again. It almost feels like we're waiting for Tesla to execute because we had no scale prior to the production hell, and then now we have scale for a couple of years and we're stuck at this level. Now we're looking for the next level, and it looks like it'll probably take around another year. And I don't know, maybe Tesla and Berlin are a few quarters away from each other in terms of opening up. Let's just put Tesla at 100% annual revenue growth and accept it might trend down next 6 months still. Yeah, because they're not growing. Yeah, maybe, JJ. Maybe because we're pretty much tapped out, I think, in terms of capacity. If we go back and we try to we check this out. So you're looking at potentially 950,000, 1,050,000 cars all going full steam ahead. I don't think S and X are going to get to 100,000 capacity. I don't know how they have that up there. I mean, I know that that's their capacity. That's not how much they're actually going to make. But yeah, if they're going to have that because we're arguably right now, if you look at the cars delivered, which they kind of started off with, let's see here. they start talking. Okay, so total production. Yeah, you look at the past 3 quarters, you got 179, 180, and 206. That is not exponential growth between the, it's not like it's 25, 25, 25, or 15, 15, 15. That is going up a little bit, but you're looking at like, I mean, 99, you're looking at a 1% increase and then a 13% increase. So quarter over quarter increases aren't really that substantial. And I don't know how many. So if you're looking at 1,050,000 at peak production, and that's if they're doing 100,000 Model S's and Model X's, which they're not going to do for varying reasons. But you take that over 4 quarters, and their peak production capacity, as it currently stands, is 262,500. Now, obviously, that's going to be a very maxed number with everything running at full speed. So at 206,000, let's remove Model S and Model X altogether. You're at 237.5. And we're relatively close to that. They have another 15% built in there. I mean, so at 85% of complete capacity, ignoring Model S and Model X, and, they're producing 1% as many Model S's. It doesn't even matter, to be quite frank with you, S and X. If they can put a 1 in front of this, that'll be about 5% of capacity. So I don't know, or 5% of total production value, but it's still relatively low. I mean, but obviously they're going to have higher profitability and things like that, and bring some of the numbers up. But in reality, in terms of growth rate, like JJ's talking about, I don't think it's a place where we're going to sit here and say, oh yeah, these numbers are going to be blockbuster going forward, because we're basically maxed out for the next 3 quarters. And then if you bring Texas online, which will arguably go in first. And remember what the gentleman said. He said Model Y, then Cybertruck. I think that's important. He didn't say Model Y and Cybertruck. He said Model Y, then Cybertruck. And I don't know what status they are in terms of producing Model Y, whether they're 10% of the way to building. Just think of the 300 robots that they need to do that. I don't know if they have 30 in or if they have 80 in or 150. They didn't mention anything like that. So we don't know how that's going to go. And then setting up the robots and troubleshooting and making a few test cars you're going to throw away. I mean, it's really a thing. And in the middle of that battery, it's really difficult to ascertain when they're going to be able to do so. So I say give them 6 months. Well, actually from now. Yeah, so if you give them 6 months from now, it's almost August. So you're looking into February. So you're looking into the first quarter, maybe the second quarter. Maybe by the end of the first quarter, you'll start seeing Model Y production. End of quarter 1. You maybe see some meaningful Model Y production. Meaningful. You're probably going to see some obligatory Model Y production in early Q1, maybe if they're really, really pushing hard, maybe late 2021, but you maybe see Model S numbers. You're not going to see anything current like Shanghai or Fremont in terms of the Model Ys there. So yeah, if you look at this quarter and the next quarter in terms of growth rates, you're looking at maybe 10% growth. And then one of these quarters, boom, you're going to get hit with, well, actually, if you think about it, so we hit 6%, and then we just hit 15% growth, and we only have another, what did we say, from 230 to 260? So we only have another 15% growth, and that's it fit their max capacity. So let's say we just get to 5% growth. Maybe we get to 10% growth. So we go for 6%, 15%, 10%. Then what do we do in Q1? If you get nothing out of Q1, you're going to be stuck at 0% growth because they're already maxed out and arguably doing a good job. But then if you do get some production, maybe you'll get an additional 10%. And then so the quarter after that, which is going to be Q2, that's probably when you're going to see a significant increase. So maybe sometime between the next earnings report or around the next earnings report is when they'll. And so we are now, so that would be October 26th. If it's 3 months on the dot for whatever that's worth. And then you look at that from a price action perspective, what are you able to do between now and then? Oh, you know what kind of looks likely? Maybe we go full on crypto sideways. That's fully possible. That wouldn't murder the chart, which means no one's distributing. It looks pretty good. It looks pretty good. I mean, hopefully we can bump up a little bit. I don't know. I don't know what we're going to do. This trend line scares me a little bit, undercutting that. That's a key trend line for me. Going all the way back down to the lows over here. For me, that's significant, but you know, Tesla is Tesla, and it's not going to be beholden to a line. We'll see what it does. So, but yeah, I mean, you guys heard the call. I didn't think there was anything good, to be quite frank with you. Nothing that good. What you got there, JJ? He did at one point say, let me get rid of my calculator here. Oh, I got rid of the wrong thing. Let me bring it back here. Luckily, it's easy to bring chat back. I'm going to make it a little bigger here. Put Tesla down at 100% annual revenue growth and accept it might trend down next 6 months still. Yeah, something he said about that too. Elon said between 50 and 100% next year. That also tells me that they're not going to be near capacity. Because he would say, if he was confident next year, he would say 100%. So I think he's thinking they'll get, because if both of those factories get ramped up, that's going to double their production capacity, which would essentially give them a 100% growth rate. So if they get it done in Q2, that'd be a 50% growth rate. So he's thinking they're going to get it sometime in Q2, or maybe mid Q2 is when they're going to finally start ramping, is what it looks like. It's inferred, but he didn't say it. Did he at one point say they will eventually go up by 1,000, maybe 2,000 gigawatt hour production? So that means they are planning to buy 1,000 to 2,000 gigawatt to get that 3 terawatt target for 2030. I don't know if he said specifically 2030. I didn't hear anything about a time horizon going that far out, but he did mention the 1 to 2 terawatts per year. But I don't remember if it was within the context of your speaking. I thought it, yeah, I don't remember. I don't remember, but he definitely, versus 100 gigawatt, yeah. Look, what he's saying is that people want our products and we just can't make them. That's what he said. He said people want Tesla products and we can't produce them fast enough, quite literally. He said we're sold out. He said we're sold out Megapack till 2022 all the way through the year. That is amazing. It's almost like he should just halt the megawatt, he should halt car production, just start selling Megapacks. I mean, in reality, that probably would be an easier business for him if he were to just focus on the battery cell and then just get rid of the cars, but they kind of go hand in hand. 0 to 200% next year? No, I think he said 50 to 100%. I'm pretty sure about that one, but that was on that. I think that was about year-over-year growth rate, I think is what that was about. Between 50 and 100. He kept oscillating back and forth. I know I do that stuff all the time. I know exactly what he's doing there. He's trying to calculate whether it's 75% or 60% or 80%, and he kept oscillating. He came back to, yeah, between 50 and 100, which means he's probably thinking like 60% growth rate, which means he'll probably think we'll get started about mid-second quarter, is what it sounds like to me in terms of when things are going to get going again. But yeah, so with price action, with investing, we have more time. So if you guys want to start dollar costing average into Tesla under $700, I think you have an opportunity to do something truly amazing for yourself over the next 10 years. Absolutely, truly amazing. Because when they get this ramping thing up, when they get this ramping thing done, I hope they don't do another battery day type of thing. Because this is what happened, if you remember. What they did is they spent 10 years getting to where they are in Fremont. Let's put this in perspective for a minute. They spent 10 years to the point where they could build 900,000 cars a year. Okay? 10 years doing that. We got our processes down. We went through production hell. We got the batteries. We got the supplies. We got the regulations. We know how to build a factory. Okay, what's next, guys? Let's throw all of that away, start over, and then double our capacity. I'm sorry. What? I'm sorry. Did I hear that right? You want us to throw it all away and double capacity? I think I misheard you. So I'm sure somebody at Tesla walked up to Elon and said, "Are you sure about this, Elon? Maybe we just build these factories as we are right now, and then build one factory, which probably, arguably, would have been better for Tesla. They probably would have. I mean, they probably would have another. Texas would be up right now if they didn't go all in on this battery day thing, the complete revamp. That could be a miscalculation on Elon's part. He's a human being after all. You heard him stutter. Only human beings stutter. So he is a human after all. But I think that could have been a slight miscalculation. But he just didn't want to waste any. He didn't want to waste any capacity on old technology. I get it. But at the same time, arguably, he would probably have, if he scaled down Giga Texas a little bit, which I don't know if he could due to scale and in the law of large numbers when it comes to auto manufacturing. If he were to cut it down by like 25%, maybe he would have a factory ready to pump out cars next month. But in Elon's mind, he's like, all we need is another 6 months and we're pumping out cars with the new style. So we're here from the investor standpoint saying, come on, Tesla, give us money now. And Elon's saying, we just need an extra 6 months and that we don't have to worry about these factories again for the next 10 years. So it's just a lot to take, and he just says we need more time. And I think the chart, right, JJ? The chart says it too. The chart's not reacting to earnings, which I didn't quite think they were, because this isn't a quarter where you're looking for big things to happen. Everyone understands it. We're waiting at a minimum until the end of the year for additional production, and we're just not. I think he told us today we're just going to have to wait until Q2 of 2022. That's basically what Elon said. So, anybody disagree with that? Anyone have any alternate opinions? Or did I just speak Elon over there? I mean, overall, a good quarter. Year over year is great. And that's likely because, China came online here. Next year, though, it's not going to look as pretty. What's next year's growth going to look like? Actually, next quarter's growth. So we're going to have 145, and we're going to, let's just say we have 215,000. Whoops. Oh. So we're going to go from 151% growth down to 33% growth is what we're going to go to next quarter potentially, because we're likely not to have any additional or very limited additional production. So I think that's what's going to happen. Yeah, see you in 12 months. Well, 12 months, I think. So yeah, what's Q2 gonna look like? Well, let's plan that out for a second. In Q2, you can argue that we're gonna have Giga Texas, and if their production capacity is 500,000 cars a year, let's say they're gonna do it 25% capacity. Okay. So they're going to be capable at that point of producing 125,000 cars. You're looking at about from 206 to 331. So you're looking at about a 50% increase, maybe in Q2. If we get a full quarter production out of Q2, which I kind of doubt. So best case scenario in Q2 year over year, you're looking at 50%. So we're probably looking at somewhere around 30%. Just giving him a little bit of extra leeway there. So we're going to be stuck at about, so I don't know, maybe the analysts got it. So if you look at Q1, look at the total numbers, 180 plus 206. We're at 386. There's no way we're hitting 1 million this year, JJ. No way. So let's add up 215. That's 600,000. And then let's just say we hit 230. 830,000. Analysts were at 850 if I'm not mistaken. So the analysts may have actually gotten something right. I'm not sure how many total were in 2020. So 831. So we're talking about 82 plus 145 plus 179 is 406 plus another quarter. So you're looking at about a 70%. Hey, what up? You're looking at like a 70% year over year increase in terms of total years. So 151 year over year to the prior quarter, but about 70% from 2020 to 2021 at the end of the fiscal year, which is still a phenomenal growth rate. Nothing to laugh about. Nothing to laugh about. And you're still doing big numbers, right? You're still looking at those big numbers. So, but I think Elon just said, hey, I need more time, guys. He just can't say it because people will throw him under the bus. And our stock's reacting basically like that's what he said. It's just kind of like, yay, oh, never mind. But, you know, it ran up right after hours, which just gets people excited. Trap some bulls up here. I get it. It makes sense. And then the earnings call happens. And, the thing didn't move. Kind of started falling down a little bit, but that doesn't mean anything. So that's it, ladies and gentlemen. That's the Tesla earnings call. Q2 2021. Elon said we need more time. We're looking at least 2 more quarters before we see some meaningful production, likely out of Texas, and probably won't see Cybertruck until maybe the quarter after that, if we're lucky. Probably the end of the year. And full self-driving, he didn't seem very excited about that either. So, more waiting, ladies and gentlemen. That's it. That's all I got. So thanks for joining me today. I appreciate it, guys, and I will see you next time.